Morning, Steve Walker, Client Portfolio Manager on npower's Optimisation Desk with the market update on Wednesday the 8th of April. There's a slight nudge higher in markets this morning with key drivers including a tighter supply outlook ahead of planned maintenance, struggling renewables on the power side alongside that. Temperature forecasts overnight, however, are slightly warmer across the period. For more information, please keep watching or contact the desk at the displayed email address. So starting first with gas markets as usual, overnight temperature runs are warmer across the forecast horizon, which accounts for a reduction in demand of around 4 MCM a day, slightly loosening balances through the period of heavy maintenance. On that note, flows through Langled are 20 MCM lower this morning. Significant volumes of production to go offline from tomorrow, around 150 MCM of Norwegian capacity. It's going to be out for around a week. LNG send out is flat on the day, it's below expectations for April. However, storage activity is relatively quiet as expected. That should be the case in the coming weeks unless there is some movement on the near side. Exports of 20 MCM through IUK are helping boost demand, which is around the 200 MCM mark today, but obviously be materially lower than that if flows across the interconnector were flat. European gas markets really gained yesterday afternoon, helping encourage flows from the UK to the continent. Gas station demand is again relatively good, considering current demand outlook at 30 MCM. We'll look at that in some more detail now as we move into power. Wind load factors remain poor through the week, well below 50%, although the back end of that forecast does suggest some improvement. Metered volumes from wind generation were below actually 100 megawatts earlier this morning, which is obviously incredibly low. Alongside that, flows through the French interconnector continue to struggle. That's around 600 megawatts this morning. It's due to planned maintenance over in France and outages in Belgium that are ongoing. Spark spreads were unchanged in the UK yesterday, despite declines in underlying fuels. Further afield, in oil markets, prices fell. There's a huge stock build reported by the API. It's 12 million versus 3 million expected. Storage capacity is expected to be at 90%. There were reports a couple of weeks ago that storage over in the US would reach full capacity between May and June, resulting in potentially some very weak near side prices. So that'll be an interesting one to watch develop in the coming weeks. Saudi Arabia also kind of unhelpfully reported production increases last month, which really kind of confirms that oversupply story that we've seen in recent months. So that's it for this morning update. Have a good day.